In the equity market, taking a look at the June S&P futures, in which the sell-off continues in equities overall. The S&P was kind of middle of the road in terms of performers today, finishing the day down right around 1.4%, 39.41.25 or so. But on the low, we were down 1.83%, 39.23.75 was the low in the June S&P. On the high side, we actually were up decent earlier in the day, 1.34%. That was 40, 50, 50. Yeah, we actually got back above 4,000. The S&P is now down 4 of the last 5 sessions, and the one session that we were higher was very small, very mild. And since the all-time high, the S&P is now down just over 18%, approaching bear market territory. If you remember, bear market territory is defined as, and this is a technical definition, down 20% from the all-time high, or from a recent high, the all-time high in this case, which happened about 117 days ago. So about over 100 trading days ago. It's actually not a short time, although it might feel like it. You're looking at CPI, which drove the markets lower initially. We actually rebounded from that, but then the sell-off continued after that initial rebound. CPI was stronger than expected, but weaker than last month in all data points but one. Core year-over-year CPI 6.2 versus an expectation of plus 6, but much lower than last month's. Headline CPI 8.3 versus expectations of 8.1, but again, lower than last month's CPI. The headline month over month up 0.3 versus expectations of up 0.2, but last month's was up 1.2. All of that positive until we got to the troubling piece of data, which was the month over month core coming out up 0.6% versus an expectation of up 0.4%, but last month's was 0.3. So the core month over month came out double last month and higher than expectation. That seemed to me the most troubling piece of the CPI data, which caused bond yields to go down in the morning prior to CPI, up after CPI, with the 10-year going from 293 up to 303, and then back down again as the day went on, as the word recession started getting sort of jumbled around in the conversation, and we ended up with the 10-year close to 293 again. So yield volatility adding to stock market volatility.